Welcome to today's market report. European stock markets are seeing opening largely lower on Friday amid a major escalation of tensions between China and the US and with little progress towards the new US virus relief package. However, losses may be stemmed by signs of industrial revival in Germany. DAX this morning traded 0.% lower, FTSE 100 fell 0.1%, CAC 40 were largely unchanged. The US President Donald Trump unveiled sweeping bans late on Thursday on US transactions with China's ByteDance and Tencent. These bans go into effect in 45 days. Earlier this week, President Trump said he would support the sale of TikTok's US operations to Microsoft if the US government got a substantial portion of the sale price. Tension has been simmering between the two powers for a month, with the United States unhappy with China's handling of the novel coronavirus outbreak and moves to curb freedoms in Hong Kong. The original cause of their tension is China's trade surplus surged back towards record levels in July, with exports surging 7.2% from a year earlier. Meanwhile, negotiations on a US virus relief deal ended on Thursday night, with the White House and the Democrats making little headway. Investors will be keen to see whether an agreement can be reached before the end of the week deadline, with President Trump threatening to issue an executive order if this deadline passes with no agreement. German industrial production also impressed, climbing 8.9% in June ahead of 7.4% growth from the previous month. This puts the focus squarely on the official US employment report due at 1:30 London time this afternoon. Non-farm payrolls are expected to have increased by 1.6 million jobs in July, which would be a sharp step down from the record 4.8 million in June. Oil prices weakened on Friday amid uncertainty over the new stimulus package in the US and the impact that would have on fuel demand growth. Crude futures traded 0.2% lower at $41.86 a barrel. Brent contract fell 0.2% to $45.01 a barrel. Gold futures rose 0.2% to $2,061.40 per ounce, retreating a touch after hitting a record $2,077.85 per ounce earlier in the session. Gold has rallied more than 33% in 2020, putting it on track for the biggest annual gain in over 4 decades. On the FX front, GBPUSD lost its momentum at the 131.65 5-year resistance line. According to the Commerce Bank, the cable is correcting lower as the 131.65 2015 to 2020 downtrend has proven to be too tough for the pound. Initial support awaits at 128.14 according to the bank. Even if American Congress gets adjourned for the week without any decision on the much-awaited stimulus, US dollar gains ahead of the key employment data portray the pair's weakness. It is worth mentioning that the Bank of England's upbeat performance and worries over the US stimulus helped the cable to refresh 5-month high the previous day. Other than the stimulus headlines, the coronavirus woes and the jitters over the Brexit, not to forget fresh trade war signals, also drag the GBPUSD prices down. Euro-dollar is trading at 118.44, representing a 0.28% decline on the day, having failed to keep gains above 119 on Thursday. Industrial production in Germany rose more than expected in June, suggesting that the recovery in the manufacturing sector gradually picking up pace. The figure measures output of the German factories and mines. Changes in industrial production are widely followed as a major indicator of strength in the manufacturing sector. A high reading is seen positive for the euro. The dollar index gains 0.32% to 93.09. This is today's market news. Thanks for listening. We'll see you next time.